All right, folks, in this video, we're going to be talking about bias. Notice I didn't say daily bias. This is applicable to the daily, but the thing is, bias is not just subject to the daily. Like, you can have a 4-hour bias, you can have a 1-hour bias on like the next 1-hour expansion. You can have it bias on the 15-minute, etc. Price is fractal. Bias is not subject to just the daily. Okay, what I'm going to teach you in this video, you can apply to the daily, of course. And I've made videos on daily bias, by the way, but they're older videos, and I'm kind of giving you a little bit more of an updated one, because some of the videos that I made in the past on bias, some were more tailored to my old strategy, which I don't trade anymore. And also, like, I've made some videos on bias that are just like bare basics for the beginners, just to really simplify. But I'm going to tell you how, like right here, right now, how I go about. It's like some tips that I utilize for bias that give me insane accuracy. I'm correct about the direction the vast majority of the time. The vast majority of the time. And I'm going to tell you how I go about doing that. And how I'm just so accurate, how I'm so precise with determining that. All right. And then, some people already, rolling their eyes like, oh, okay, well, what are the receipts for that? The receipts are in my free Discord, where I post every single fucking day. Okay. I'm not right all the time. I have losses. Okay. I have red days. I even have losing streaks and drawdowns, which nobody want to admit, but it's just a part of being a trader. But I'm right the vast majority of the time in regards to where price is going to go to, where it's drawn to. And then I have my plays plugged in my free Discord. So the receipts are in there. If you want to join that, there's going to be a link to that in the video description. But without further ado, let's get into the lesson, because I'm going to show you how you can do the same here, how you can get insane accuracy. I'm going to be giving you some gold on a platter in this lesson, so pay very close attention, because you ain't going to get this type of information in many other places. All right, it's either behind the paywall, and I'm going to give you some gold here because I want to see everybody eat. I want to see everybody eat, not just my mentees. All right, my mentees get plenty of gold, but I want to see my students on the free side of things as well. I want to see everybody eat. I want to see all y'all do well. All right, regardless if you pay me or not, I don't care. I want to see you eat. I want to see you win. All right, so I'm going to give you some gold here. All right, so take notes. 4-hour chart here, USD CAD. We had this thing. I want you to take your attention right here. This took liquidity. Why is this liquidity where my cursor is? Because we have our lowest low in the middle, high low on the left, high low on the right. That makes that a swing low on the 4-hour chart, aka higher time frame sell side liquidity. Okay, mark off that level. What happened to that level? Price came down right here, and it took care of that liquidity. You see this? It took care of that liquidity, and then it closed. So here's what you're going to be doing with bias. You need to set like alarms. You need to set like alerts whenever you get these candle closures like this. Okay, so like, for example, a 4-hour candle, you'll have a new one form at 5 o'clock. 5 o'clock is a good time to start hunting. Okay. And could you do 1 o'clock too? You could. That's not my kill zone. Like, I don't even trade in that 1 o'clock area. So you got to work, like, whatever your kill zone is. We all, like, some people have different kill zones depending on their time zone, where they live, etc. Just understand, like, when these 4-hour candle closes, you want to be paying attention. So, like, for example, you get this at 5 o'clock, and what does a new one? What does another one happen at 9 o'clock? So guess what? You have a London opportunity, and then you have a New York opportunity with these 4-hour candles. And I'm not saying you just got to do the 4-hour. You could do the 1 hour as well, of course. All right. After every 1-hour candle closes, you can go in and hunt for this. What I'm going to teach you here in a moment, you can go in and hunt for these signatures. And because the candle closures, they tell you a lot. It goes back to the saying, the wicks do the damage and the bodies tell the story. So let's unpack that phrase. The wicks do the damage and the bodies tell the story, and how this is crucial information, how that is crucial to determining the bias. Okay, so we're going to take this right here. The wicks do the damage, right? What did the wicks do? It came down, and we already determined, we've already concluded this is higher time frame sell side right there. That's a big level right there, huge liquidity right there, and it took care of that liquidity right there. Look at that. All right, and then this candle closed at 5 o'clock, remember, but look at how it closed. Look at how it closed. Yes, I'm going to go and replay just for the sake of, so we don't get lost in this price action over here. So you can see that candle right there. It closed. How did it close? Bullish. It closed bullish. And then you have the high of this candle right here. Note this. The wicks do the damage, the body tells the story. So, like, what's the story here? It closed green within that previous range. You took out the previous 4-hour low, but more significantly, you took out this higher time frame sell side here. And that's the big thing. You took out liquidity, major liquidity, and you closed strong off that, and that candle closed. So here's the thing. Now you're coming into 5 o'clock here, a new candle. Price, understand this. Price is going to move in the direction of least resistance. It's going to move in the direction of liquidity. It wants liquidity. Okay? And this liquidity has already been taken. So it has no reason to move down there because it respected it. It's telling it. Now, if it had like a strong close beneath that, that'd be a different story. But that didn't happen now, did it? No, it didn't. It took it, it respected it, and it closed strong, telling you that it does not have any interest in going lower any further. Its sole intention was to take that liquidity because it closed strong. Remember, the bodies tell the story, and that is the story that is telling you. It's telling you that it wants to move up, has the liquidity. So when you get this candle to close like this, folks, where is your next draw in the, I'm talking about your absolute next draw, because we're forming a 4-hour bias. When I'm talking about this, like we're talking about bias, you're forming a 4-hour bias when you do this, okay? Because remember, a brand new candle is coming into 5 o'clock, so you're framing a bias for the next 4 hours, okay? So as soon as you see this candle like this, if it's taking out significant liquidity like this, you have a strong close like that, your bias is going to be bullish next, because you understand this is what it's going to gravitate next to, the high of that candle. There's liquidity above that. Now, this is how you form a trade plan with this, and this is how you trade this, all right? Because a lot of people talk about bias, but they don't tell you how to trade it. I'm going to show you how to trade it. I'm going to tell you how you can bank. What I'm about to give you right now, I'm not just hyping you up. I'm not just, talking shit here. You could build an entire model. What I'm telling you right here, I'm giving it to you on a platter, gold on a fucking platter right here. That's going to be the level you target right there. Okay. And in this candle is where you're going to hunt. That wick is where you're going to hunt. All right. This stuff repeats. Candlesticks, all these candles got wicks, don't they? Yeah, they do. And guess what? Power of 3 is not just subject to a higher time frame, folks. Really think about that. Really think about what I just told you, because it's going to click for you with what I'm telling you right here, because it's gold. Power of 3 is on a lower time frame too. So if we confirm that this is taking out higher time frame sell side here, and that this has a strong close in that previous candle, it tells us the story going forward for the next 4-hour range. And then we go into 5 o'clock here, new candle. And here's what you want to see next. Pay close attention. You want to see it sell off first while leaving that intact, the high of that candle intact. You want to see right here, the new candle opens, you want to see it sell off before taking out that right there. Before taking out that right there, folks. Okay? Because remember, the liquidity is what gives it validity. The liquidity is what gives it that strong draw. And what I'm giving you here, I'm not saying it still can't move up. Like if it came up and it took out this high and then it pulled back, I'm not saying it still can't have another leg higher, but I'm giving you the highest probability deal that you can get. I'm giving you the highest probability scenarios that you can get here. Okay? So yeah, sometimes it's going to immediately open up and tag out the high. That's going to happen. Guess what? You got to get used to that. If you're aiming for perfection, 100% gives me this scenario every single time, you're in the wrong business. But I'm saying if you have these signatures that I'm about to show you here, that I've been showing you here, and that I'm about to give you more of, you can absolutely clean up. You could, those goals that you have, you want to trade for a living, I'm going to give you the recipe for it. All right. You want to get rich, I'm going to give you the recipe for it. And I'm not exaggerating. Okay. But I can give you the signatures, but you having that discipline, you having that patience, that's the real hard part. All right, what I'm giving you here is the easy part. I'm giving you the framework. But back into it, what I was saying, that's the draw. that high, that 4 hour, you form the 4 hour bias. That's what we're doing here. You formed a bias. All right, you understand that it's going to gravitate to that liquidity, but you want to see it left intact, and then you want to see power of 3 on this next 4 hour candle. You want to see what? You want to see a fake move lower, and that fake move lower, the wicks are where you enter. The wicks of that candle where you enter. Okay, and you want to see that liquidity right there intact. Now here's another. This is going to be another moment that clicks for a lot of you. That makes this click for you. You're going to go into this candle here in a lower time frame now, and you know what you're going to look for? You're going to look for your shift. This is where you're going to get your highest probability shift that you could ever find, is when you have these signatures. Because look what you got here. Remember, you're hunting into 5 o'clock. You waited for the candle close, 5 o'clock. You got your alarm set. You're now hunting. You see that set up. And look, you got that right there. And then look right here. This is a 15-minute bullish shift. Is it not? Look, fair value gap, strong close, significant liquidity run. It scratches off all the criteria for a shift. So where do you enter? Do you get a discount? You sure do. Look at that. Look at that, folks. You get a discount marketplace. That's after 5 o'clock. It moves lower first before taking out this high. Look, right there, still intact. 5 o'clock moves lower into a discount, into OTE area. Okay, you can enter in there. You could enter in there, and then you could run out that high right there. That is how you trade it. You could risk that low. If you want better risk reward, then that's why you go down to an even lower time frame. That's how you do it. Price is fractal, remember, and I made videos on this. Okay? If you don't like the risk reward there, if you're not like me and you don't like low-hanging objectives, and say you want better risk reward, then you could go down to like a 5-minute chart and then look for a lower time frame shift off a discount within that 15-minute range, and then do it like that, and then find a way to risk this low and target that high real quickly. Just so, because I'm not sure if the 5-minute gave it or not. I was more focused on that. But price is fractal, so let's see. So you can see, like, for example, it came down into a discount right there within that 15-minute range. You have your draw up here. Like, you've already formed the 4-hour bias. This is your magnet for price. You know it's going to seek that likely. Okay, you've already done the work on the higher time frame and formed that bias. You got the strong candle close. You got the significant liquidity run. And now right here is you get a shift. It didn't really get much of a pullback, but you can see that's your 5-minute shift though, right there. And then it ends up seeking the bias that after has that 5-minute bull shift. Just like that. Okay. And this signature that I'm giving you, it repeats. Like literally, this is all you're looking for, like for this scenario. I'm gonna give you another scenario here as well that I was talking about the other day. But right here, go in at these candle closures and then look for specific signatures like liquidity runs. Okay, this ran liquidity, did it not? And look at how it closes. Guess what? That repeats. That isn't just like a one-time scenario. That repeats. You will see it. All right, maybe not left and right, depending on the time frame you use, of course. But we're talking about a 4-hour right now. Maybe not left and right. You're going to get setups, but guess what? That comes with high quality. Is you don't get it left and right. But if you have the patience, which is going back to our psychology lesson I was just having, then if you have the patience, if you can get that down, you're going to be eating. You're not going to be right all the time. You'll still have failed setups, even with all this criteria. But if you were to execute that 50 to 100 times, you're sitting real nice at the end of it. And that is trading. That's good trading. Okay. But that's what you look for. Respects it. Closes strong. Each candle tells a story. You want to see it respect the liquidity, and then you want to see it close up within the range. And then the high of that candle is what you're going to target, the high of that 4-hour candle, because then that gives you your bias for that next 4-hour candle expansion. But the key thing here is for the highest probability deal, you want to see that candle left intact, the high of that candle. And then that wick is where you enter, and then you run out the high of that candle. And then that's where you go to your lower time frame, look for your shifts, or you're changing the state of delivery. And that's where you enter in there. And then you route it up into that. Now I'm going to use a 1-hour example from the other day that I was talking about. So with Euro USD here. So I was talking about this with my mentees in our third live stream session. We were talking about this right here. So this is a little bit of a different scenario, and that's what I want to do here. I want to give you a couple different scenarios that you can look for and that you can approach price with. Okay, because it's the same exact thought process on different time on every single, like, price is fractal, right? But with Euro USD, with this, I'm going to teach you how to form the 1-hour bias. We talked about a way to form 4-hour bias, but after each of these 1-hour candle closures, you can go in and you can hunt for specific signatures. So like what we saw right here, look at my cursor. You see this 9 o'clock 1-hour candle right here? I saw that close right there. Look, you see how it closes above that previous high right there? There's liquidity above that high right there. It did not respect that. It closed strong above that. It's still in that upswing. And it's like the same exact thought process that we do with like the daily chart, and how like whenever the daily is in that upswing or that downswing, and it's so objective when it's in an upswing, for example, is to continuously run out previous day's highs until it's met with enough liquidity to frame that reversal in that next downswing. So the 1 hour is the same deal here. It's in that upswing. You see how you have that swing low put in right there, and then you see how you had that like that strong expansion above this previous high. That's not showing any indication of weakness. And think of like the 1 hour as like another higher time frame for you if you're like a scalper. And like say you're scalping a 1 minute chart, then this is like another higher time frame for you because it gives you direction, because you're anticipating, you're utilizing this time frame for bias, for your 1 hour bias, what it's going to do in that next 1 hour, in that next hour. So when I see this candle close at 9 o'clock and we come into 10 o'clock, that gives you a time to hunt, because look what it does here. That close is strong, and then you have that high right there. That liquidity right there, it's intact. Look what price does. It opens up right here. Look at my cursor. This 10 o'clock candle opens up right there where it's moving. And you only have this information now because you see that closure. You see the strong close above the previous high right here. You see it close with aggression, with strength. It's still in that upswing. No swing high, nothing. No indication of weakness whatsoever. And then it sells off first things first. Power of 3 yet again. Now we see it on a 1 hour chart. We see this on a 1 hour chart. And for those folks that don't know Power of 3, I don't want to make this video too long, but I'm going to leave a link to a video that I made on Power of 3 in the video description. Okay, because I know some people are kind of confused, like, what does it mean by Power of 3? There should be videos to that in the video description. That'll all make sense. But its price is fractal, so that can be used on different time frames, even the 1 hour chart. Okay, so we have this as our draw up here. That, like, because I see that strong close, that expansion, I'm able to form a bullish bias in the next 1 hour because of that, because it's not respecting the previous high, because it's super strong. And this opens up right here and sells off first while leaving that intact. That's what you want to see. Remember what I was just saying previously, the wicks is where you're going to enter. Look how it comes down into this previous high. Because guess what? It turns that into support. And that's what we were anticipating when I was talking about it the other day on mic with my mentees. We were saying, okay, it's probably going to reclaim this as support now, and it's going to attack that previous high right here. It's going to expand up into that because that's our draw, because it already had that strong close. It didn't respect any of these previous levels, so it's going to gravitate to that, and this is our little fake run lower down into support. You see? Each candle tells a story. And now what you're going to do, how you can approach this. I really don't like the 1 minute with Forex, but I did it with this example because I had to. So this is your draw, and look how clean, look how smooth these levels up here are as well. Look how smooth that is. And then look, that's the high of that 1 hour, just on a 1 minute now. You see what I mean? And then what happens is, you can see a little bit later what happened. We had our shift. You see like right here, it's kind of hard to see, but you see like these short-term highs right here. And you see like that big explosive push, fair value gap, strong close. It didn't get much of a pullback, but you can see what it does. It seeks that opposing buy side. See what I mean? So you got your draw, and then that was that old 1 hour level. Like you can see in there, you got that old 1 hour level. It comes down into that. It comes down into that, and it reclaims it as support while still having that draw up above intact. So remember, your bias is bullish, and now you get a liquidity run right there. See how it kind of built in that liquidity first off that level? It builds in that liquidity because like it has that first test that just off that level to kind of build in to create that bait, and then it takes that bait, gets your shift, and then seeks opposing buy side. So then you can like get in after the shift and then just ride this thing up for a little scalp play. If that's your style, that's what you like. But you see, like, it's the same thought process. Like this 1 hour deal isn't exactly the same as like what that 4 hour looked like, but you can see how you can navigate it because you know it's going to gravitate likely to that high again. It's still in an upswing. It didn't respect the previous one. And now you can go in here and you could look for that first move lower while leaving that intact. And then you could look for your liquidity run. You could look for your shift or your change in the state of delivery. And then you could just run out these highs, and you can just continuously do that. And lastly, I'll go over our futures example. So just to kind of, so like this is what we were looking at. And I'll pull up, so look right here. NASDAQ, if you look at my cursor, I'll go to replay. But again, plugged all this in chat. Receipts as usual. right there. You see? So I have this, plugged right here at 10 o'clock a.m. on this particular day. NASDAQ bullish, looking around at the highs. And I utilized the same thing that I've been teaching in this video to come to that conclusion. That's what I did. Now this one specifically is this is a change in the state of delivery where this actually happened, which I'll go over because like in this picture that I have posted, you actually don't got a 1 minute shift or anything yet on that, but it's a change in the state of delivery. You see like those little down close candles. You see how it came down into it right there. Respected it. So that's what we got right there. But back to what I was saying, because like this candle closed when 10 o'clock. That closed at 10 o'clock, and that's yet again that 1 hour candle closes at that time. It gives you a time to start hunting. All right, you can hunt for setups, because what does this tell you? What does that tell you right there? When you look at this candle, it actually did slightly close red, but what does that tell you? Because it took out what? It's still bullish market structure on the 1 hour chart, and it took care of Asian session low sell side right here, and it came down into this big higher time frame imbalance. That's a higher time frame level of support. Asian session low sell side. It wicked all the way through it, which is fine, but then it closed all the way above it, and even closed above that previous 1 hour candle right there. It closed above that. That is so significant, and that tells you so much about what's going to happen going forward. Same exact thought process that I did with the previous examples. Look. Now this one and like the Euro USD that I had a second ago is like they're kind of it's a different scenario, and that's what I want to do here. I want to show you different scenarios, but this one's like very similar to the first example that I gave you. You see what I mean? I'm kind of giving you a way to approach different types of environments. So like this is based on like a major liquidity run, just like the first one was based on that major liquidity run, but then the Euro USD was in like a strong trend environment, and you can play both of them. All right, with this type of thought process. So then like this thing comes down here and it respects its sell side, and it has like that super wiki deal. It's telling you that it is failing to displace beneath that. It doesn't want to move lower. It's bullish. Where's your next draw? Where's your next liquidity going to be in the short term at least? Right there. You see that 1 hour candle high right there? Look at my cursor. It's going to seek that next. I was overall bullish that was going around these highs too, as I was talking about, but this is like the next low-hanging, this is like what I call low-hanging objective, a base hit, okay? And it opens up right here, folks. Remember what I was just saying a second ago? The wick is your opportunity to get on board. That wick is your opportunity to get on board because that's still intact up there. Folks, this repeats on a consistent basis. When you see these signatures like this, it repeats. And this is what I mean when I say candle confirmation. And then this opens up right here and it sells off. It sells off. And this is where you hunt. You hunt in that wick. All right. And then you can get on board the expansion into the liquidity that's residing up above. Okay. So 10 o'clock, remember 10 o'clock is where that actually confirms. So then you start hunting at 10 o'clock. So it's kind of pushing up right here. First things first. This is what I mean when I say it actually did give the shift a little bit later too, by the way. It actually gave the shift right there, but it had the change in the state of delivery right here. Because you can see you have this, order block right here. You have that order block down there, and look what it does. It comes down and it retests it a little bit later for you right there. It comes back down into that area and it tags out the sell side down here. So it gives you an opportunity to enter while still having that intact. You see what I mean? So draw your Fibonacci. Here's your displacement range. You already confirmed what your 1 hour bias is going to be. Your 1 hour bias is bullish. That's the point of this video, is we're establishing a bias and how you can trade that bias. You've established the bias. The draw's up here where my cursor's moving. Okay. So you're looking for that next 1 hour expansion into 10 o'clock. And guess what it does? Boom. It does do it, of course, but back to, so you could do it a couple ways. Of course, you could take the low hanging objective, or you could shoot for that. You could shoot for the high of that candle right there. And look. You could do it right there and then target that 1.29. Maybe you don't like that risk reward, like, because I know some folks are so fixated on big winners, right? Myself, I'll tell you folks right now, as I've said it so many times, there's nothing wrong with 1-to-1 or a little bit over 1-to-1. You can clean up and get rich with that. But if you want bigger risk reward, folks, with this low hanging objective type of style, then just wait for a deeper pullback. Sometimes you'll misplace, but that's how you do it. But you can see that's how you could approach it. You enter in down here and you run out this basket up here. Cleans it out. All right, folks, so I hope you enjoyed this video. I just literally gave you so much gold on a platter right there. All right, that's more gold, that's more game than most of these folks who are charging are going to give you ever. more value than they're ever going to give you. So if you did enjoy, make sure you at least leave a like on the video to show the appreciation. Subscribe to the channel, turn on notifications, and I'll keep this content coming. All right. See you later.